wrap on it, and again lease it out at the same rates that the guy next door is doing.
Got it. Okay, that makes sense. Let me take a pivot for a moment because I see, a lot of inspirational stories, at least that I'm aware of, that the audience wouldn't know. And so if I call this the inspiration piece of the conversation, why don't you folks just share one of the projects that you've worked on that you really were most proud of and that you think is most reflective of kind of the ethos of your business? For instance, I've seen some of Tom's projects and I said, I walked away excited and said, oh my goodness, there's some really electrifying things happening around here. What are some of the projects that you've worked on, or one that really got that type of feeling out of you? And anyone feel free to jump in.
I would probably say my crowdfunding platform that I launched, going through the compliance piece. So we're a member of FINRA. We're regulated by the SEC. So that was challenging in itself. But what makes it so rewarding is that I'm able to, through the platform, able to help folks to get into commercial real estate investing. And they probably wouldn't even think of it, or because it's typically a marketplace. So far we're having our first deal. We're halfway through the raise, and there's a lot of first-time hotel investors in there. There's a lot of first-time folks who've invested in commercial real estate, and they didn't think it was possible, because typically the minimum, we can be in the higher 5 figures or 6 figures or 7 figures to get in on a deal. And so now I created an opportunity for retail investors to get into the space, and their balance sheet is changing, their mindset is changing. And so that's probably one of the most, and we're helping two people, right? We're helping two sets of people. We're helping the GP, the general partners, and the limited partners, because now the general partners who may not be able to, they're trying to figure out how they're going to raise capital. And now we're connecting them with people that they probably wouldn't normally have access to, or even to promote it, because just a lot of regulations. So it's exciting. I can't wait till we complete our raise. And this one will probably be the most historic and most momentous occasion, because this hotel is Black owners, so the entire general partnership is Black. The majority of the investors are Black. The crowdfunding platform is Black owned, and then they're going to be a part of Wyndham's, because they're converting to a Wyndham property. And so they're a part of the Wyndham Bold program, which is the Black owners lodgings developers. So they're going to want to be the first hotel openings in that program. And then the management company is Black as well. That's going to be operating the hotel, the day-to-day operation. So in the hotel industry, you can't get any more Blacker than that. And so the fact that and the people who put the deal on the platform, they were my first investors in my hotel, for my very first hotel. So this deal will probably be, once it closes and we successfully raise the capital, will be like, wow, like this is it. This is our ancestors' dream. So that's my inspirational moment. And I can't wait till we get out to the blackity black closing table, because that's I forgot to mention, the hotel broker is Black. So you can't get any more Blacker than that.
Close the circle. You close the circle. Oh, that's phenomenal. Thank you for sharing that. Anybody else?
Well, just to piggyback off on that, one of the projects that we're working on, right now, is we had the opportunity to do. I did a couple leases with a production company, a film production company, who was looking for some space here to do a TV series, in which led to a conversation with another production company who was looking to create a studio campus here, in Dallas. And so we actually were able to talk with them, had a good conversation with them, and got them locked in. And we're actually doing a P3 project with to bring their studio to one of the local cities here, and the entire team that we put together to develop the mixed use project around the studio is all Black. So I used
Excellent.
my real estate executive, my Reese connections, and brought in, a complete Black development team. So I would sort of piggyback on your comments on that. That's probably my, you know, the project that right now I'm like mostly, excited about. For that main reason. I mean, the studio part of it, don't get me wrong, the studio part of that's cool. Actually, the studio producer, who's back in the project, is Hispanic as well, so it will be a complete minority team all together. So, and it's great, to sort of hear those types of things, more and more now, because I think if we don't do that, then, with everything that's going on, we might be in trouble.
Mhm.
So
Absolutely. Thank you for sharing that. Go ahead.
Yeah, so first of all, Dave, man, that's an amazing story. I'm excited for you, but kudos and congratulations on setting up that crowdfunding investment platform. That's huge. I'll say that mine is probably a little less inspiring. What I tell folks is that you know my training on the institutional side, causes me to be a little more of a dispassionate real estate investor. I tell folks I'm a value real estate investor, right? And so, from that standpoint, I tend to be really dispassionate about deals, but I'm passionate about real estate. I really feel that, this is my purpose on earth. I was born to do real estate, and I'm walking in my purpose right now. But I am a value investor, and so I am a dispassionate real estate investor. So I tend to think about deals in terms of ones that perform the best. And so a deal that's doing pretty well for me is actually, and one that I'm actually proud of for a number of different reasons, is the first largest industrial acquisition that we did under this new platform. Was approximately $55 million portfolio that we acquired, several 100,000 square feet, located in 3 different states, and required us to go out and raise, approximately $16 million of equity. That was a deal that I'm proud of for a number of different reasons. Number one, it's performing extremely well. I think our investment thesis was spot on. If you kind of sort of juxtapose our, annual net operating income, to our expectations going into the deal, it's exactly where we thought it would be. But more importantly, oftentimes, when we go out and we start our own platforms, there's a certain level of fear and trepidation we have just because we don't actually know if people will invest with us. This was the deal that required me to go out and, approach our investor base, which tend to be high net worth accredited investors, and raise a substantial amount of capital, which we were able to do. And so from that standpoint, I think that deal really set us up to, number one, have a reputation in the marketplace as the type of group who will actually pull a deal under contract, who will close, right? There's certainty of execution there, but also gave me the confidence in knowing that, I actually do have the ability to go out and raise capital, right? Maybe I do know what I'm talking about. Maybe folks actually do trust us and are willing to continue to invest with us. And so, that gives me, I think the confidence to continue to put one foot out in front of the other, continue to pursue investment opportunities, and really provided the foundation for the growth that we've seen over the last several years.
Amazing. Absolutely amazing.
All right. I'll jump in real quick. I'll just do 2 quick ones. One, proud of the performance of our first real estate fund focused on luxury vacation rental homes. That's on track to do about 25 to 30% returns net of fees, approaching a 3x equity multiple. The vintage year for that was 2018. So proud of that performance. One, because it's our strong performance for the first fund, but also 90% of our LPs are Black as well. So really putting money into our community and helping them build wealth and learn along the way. what we're doing. Secondly, our second real estate fund, we raised $11 million. And one of the projects for that fund is a 12-bedroom, 15-bath, 14,000 square foot luxury vacation rental home down in Orlando, Florida, on the sixth hole of Jack Nicklaus Course and Reunion Resort. And we're confident this is going to be a world-renowned vacation rental home, indoor basketball court, indoor bowling alley, multiple game rooms, resort-style pool. So I'm really excited for this project because it's going to be a construction marvel, and it's also going to delight thousands of families and guests as they come to stay at the house. So excited about that project.
Outstanding. Yes, I'll dive in as well. So, unlike Truman, I would say I'm very passionate, about the deal. Also too about the numbers, but also about the deal. I think one of the more unique things that my wife and myself do is, we'll because we're dealing with old buildings and they're taking new form. We like to commune with the building, kind of, trying to take on the energy of the building to then see what the new form is going to be. So, in light of that, one project that I'm excited about for a number of reasons, but initially it was the oldest building that we had ever revived. It's from 1784. And it was on Main Street, and it was, Main Street being one of the more prominent stretches here in Rhode Island. And it was the worst building on the best street. And this was all during COVID that this deal was found and negotiated. So by the time it took us about a year to essentially gut it from the inside out and rebuild the structure, it brought new life to the street. And, a lot of people hadn't even known that the building even existed. It was just distressed for so long, they just blocked it out of their minds. But I got a picture of it here. And so if you can see that there. So we went,
there you go.
There it is. Yeah. So we went black in a whole nother direction, but it is quite black. And what was cool about that one is it segued into several other acquisitions in the town. Obviously it had quite a bit of buzz. It was award-winning project that led to several others. It was another one that we ended up grabbing here. See if I can show you that one. This one came along with that, also with quite a bit of black on there. Got another one that came off that as well, also quite a bit of black as well. And this one, believe it or not, all of these projects are in the same town and came by way of that one. So what turned into a $700,000 acquisition turned into a 15 million assets in about 2 years. So it was quite the play. And we've done other historic projects throughout the state of Rhode Island as well. This was a school that we converted.
Look that up a little bit, Tom. Okay. Look that one up, yeah.
And that was a historic school that we converted. I'm sorry.
Wait, so I'm curious. So what did you do with this? What did you do with this property? This is
So this was a historic school. It was interestingly a nice interesting fact about this one. It was once in Massachusetts and also in Rhode Island, where it is currently. But the line, it literally sits on the line. So back when this building was created back in the early 1800s, it actually was in Massachusetts. But that one there, we converted to multifamily. It was probably distressed for about 50 or more years. And, we were able to get that at a really good basis as well. And then essentially, 10x that value from where we purchased it. So that too was a very good deal. So that's another element about the adaptive reuse is, you're able to buy them at, such deep discounts and, with a strong construction background and being able to go ahead and do that element of it. It does really, offer some forced appreciation that couldn't be acquired any other way. So that is another reason why we like that. We currently have a church under construction to also be apartments as well. That'll be 15 units. And then that initial one was like 10. So they've all been in that small to mid-size range, but they pack a big punch in terms of their value. So that's one thing that I really, really like about our market and also adaptive reuse.
I was inspired before. I'm re-inspired again. I'm mindful of time. I think we started 5 minutes late, so I'm just gonna go and ask one more question and maybe just open it up. But since and Truman spoke a little bit to it on the topic of capital, it's a perennial focus, of every operator in general. But I would say more specifically in this demographic, deriving, the comfort and the depth of an investor network can be what dictates whether you can actually scale like you folks have or you can't. So if maybe you could share a little bit about how you're capitalized and how you figured out how to crack that code, for lack of a better term, and are you at the peak of the summit, or is that next kind of phase in process, and what does that look like?
I mean, I'll speak first on this because I think I'm probably the only one here that is a solo investor. I don't have any outside capital involved in my deals. So, one thing with that, obviously, we see leverage. So leverage being a heavy part of what we do, but also being able to, come have the number set, be strong with, with your budgeting, and also strong in execution, being able to perform in the amount of time necessary. So what we're using for finance, it really is institutional, or basically like that next tier up from hard money. It's access to capital that that we've had relationships with. They understand our product. They understand, the speed in which we do things, our resources, our access to things. So it's probably more of an investment in us versus, say, the deal itself. Obviously, we have the architects that will draw up the plan, so they'll see that end result. But I think ultimately, buying into the vision really comes down to the sponsor. So, obviously having the track record, but deep relationships have assisted in getting the financing. But ultimately, it's been, a solo effort in terms of the equity. And so just finding those lenders, institutional style lenders that can give us the leverage needed. And that's pretty much how we plug through from inception to today.
Amazing. Amazing. I guess that's amazing that, you're able to do that, without any outside investors. So kudos. As far as I wasn't fortunate enough to go that route. So we had to bring in outside investors. So for the first hotel, we did the friends and family route. We were able to come in and not put the full 20% down. You mentioned the leverage. So we were able to assume the loan, which was able to, because we actually acquired the asset during COVID. So we were able to acquire the asset with an assumable loan with a very low interest rate. So you're looking at like 4.5%. And then we were, and we only brought in or had to bring in, and not necessarily even had to bring, we just did it. We raised capital we paid for the mortgage and insurance and taxes for the first year. And we just explained to the investors after year one that, that's when you'll start receiving your distributions. And so from that, once we were able to grow our portfolio, we'd start bringing in different types of investors. But yeah, for the first project, it was personal capital. And then the rest, it was friends. We did the friends and family round. So for those who don't know what that means, you're just calling up basically your friends and family, asking if they want to invest in an opportunity.
Yeah, that's great. And I got similar to Davon, I'm a syndicator, right? And so, I think that, most people, if you're going out and really trying to scale your platform, if you look across the universe of, real estate owner operators, I would say, and I don't think I'm exaggerating using hyperbole when I say this, like 90% of the world out there, syndicates their deals, right? And, you go out and you raise capital. And so from that standpoint, the way we do deals, typically our co-invest is, 10% of the capital that we're trying to raise. And, we'll go out and raise the balance, so 90%. So if we're trying to raise, $10 million, we'll invest $1 million, and we'll have to go out and raise 9 million. And traditionally that has been, again, with high net worth accredited investors. I'll say that we've been fairly fortunate in that we've been successful in doing that up to about $15 million, right? Once you get to about $15 million, at least for us, it starts to get a little more difficult and challenging, trying to raise additional capital, because from that standpoint, you're almost, scratching and clawing, at maybe $50,000, $100,000 increments as opposed to $200,000, $500,000 increments. And so once you get above that, for us, again, we tend to look towards more institutional private equity routes. So, potentially family offices, or, your more traditional, private equity shops. Now, I will say that our group, I think, is in a little bit of an anomaly, only because, prior to forming Intersection, again, we already had a, large network of investors, friends and family investors who were investing in our deals under the prior platform. Again, having 36,000 units, 140 assets, 14 states. And, my partner and I co-led the National Multifamily Acquisition Platform, in addition to, by and large, a third-party capital raising platform. We already had relationships with the vast majority of those investors. And so when we switched over to Intersection, a lot of them came with us, fortunately. So we already had a network of investors in place who would continue to raise capital with. What I will say is that, I think, given where we are right now, I wouldn't say that we've reached the pinnacle or the peak of that. But what I will say, those folks, high net worth individuals, tend to be more driven by cash on cash returns. And again, that type of yield is really just the financial or a math problem, right? You're solving for going in cap rates relative to your cost of financing. And given where interest rates are relative to cap rates, it becomes more difficult to offer your investors like a current yield that really makes sense to them, especially when you consider you can go out and buy, triple B corporate bonds that are yielding 6% right now. Telling someone you're going to give them a current pay of 8% or 10%, really isn't like the type of risk-adjusted return that they're looking for when they can make a riskless investment and get 6%. So, what we are tending to look towards right now is more institutional investors who are, as opposed to being more driven by cash on cash, tend to be driven by more total return, so IRR. So, forming relationships with your more institutional, traditional private equity shops and family offices who are more IRR driven.
Mhm.
Makes sense. Carrington, did you have anything to add? I know that you've also had success in raising pockets of and you spoke to a largely Black investor base.
Yeah, yeah. So initially it was mostly self-funded. My business partner Calvin Butch Jr. is on the call, so our family's putting our money together and trying to scale. And then as Tom mentioned, kind of on the lending side, I would say the same rules apply on the equity side. Having a track record, having good deals, and relationships are also very key. And then as we developed that track record using our own capital, people started to believe in us and ask how they can invest alongside us. So that's why we started a private equity firm, East Shop Capital. Our first two funds naturally focused on the luxury vacation rental home space. Across those two funds, we raised about 15 million total. All individual accredited investors, 90% Black, 10% white, 18%
Carrington,
women.
let me just cut you off there because
Yep.
that's a phenomenal stat to just kind of throw around. I mean, were you using a third party firm to help arrange that? Were you literally pounding the pavement and just hitting the phones or your personal network? Tell the people, how did you build that network?
Yep. Pounding the pavement, door to door. Calvin's been cultivating relationships for over 2 decades. I've probably been the same for the last decade or so. I mean, it was kind of pounded into us early on that your network is your net worth, and so just continuing to build upon that network. And then as far as are we at the pinnacle or the peak? I will say I think our philosophy has changed a little bit. We didn't get any institutional support. However, I feel that we built our own institution. And so if we have 175 or 200 LPs now across our funds and other syndications, if we continue to build upon that, and if we can get this investor base to trust us with anywhere from 250,000 up to $1 million over the next 10, 20, or 30 years, that's a sizable LP base of anywhere from 40 million up to 250 million, which will be able to finance a good percentage of the deals that we do now and far into the future. So we built our own institution and we're going to continue to cultivate that and grow it.
I love that. I love that. So on that note, I see we're butting up on 1:30. Maybe we should open up the room for questions. I see some familiar faces. I see Andre. I see Yvonia. I see Nicole. I'm sure one of those folks has a question. I'm putting you on the spot. Well, so what do you want to know? I know we've had a lot of offline. What? And Denise, if you can, I guess just allow anyone who has a question to either post it or to ask it to the group. while I leave a second, if anyone does have a question, Truman also spoke to the fact that, ultimately strong cash on cash is going to be driven by the difference between wherever you can acquire the asset or where you can and where you can finance it. How are you guys dealing with the current interest rate environment? Are you sitting on your hands, or are you in asset management mode? What do you think 2024 looks like for you guys?
I mean, I go first on that. We've been blazing ahead since COVID. We haven't stopped. In fact, we picked up speed. Our philosophy is really more or less long term than short term. And if you have a long term view, especially with multifamily or any asset, truly, if you got a long term view, you'll be able to outlast those waves and bumps. So naturally, I feel like we're definitely headed, say, in a better interest rate environment at some point in time, whether it be this year or next year. We do know that the rates will improve. So I figure if you're buying assets today that make sense on today's numbers, rest assured in the future, those numbers are going to play out even better. We're bullish, I would say, and we have been, throughout this entire time, and it served us with that philosophy.
Nathaniel, or what do you think?
Yeah, I would say for us, the interest rate did hurt, but I think what more so hurt us, especially from the land perspective, would be just seller expectation. And to be honest, that's why we haven't really focused that much either on the acquisition side, is because of seller expectation as well. Everybody wants a 5 cap, and we're in a 7 cap series, a season right now. So I think some of that has changed. We've seen in this market, we've seen land comps sort of come back to where they were, post COVID. I mean, prior to COVID. And so we see sellers are becoming more open to an actual market price for their land. So we're able to pencil deals, even with the interest rates a little higher, we're able to make deals pencil because of their expectations are sort of coming down. And we're actually seeing more acquisitions in this area pop up as well because of that, as well as we've seen opportunities come, and they're 6.5, 7 caps instead of that same opportunity last year was they still wanted a 5.5 cap. So I think for us, it's just really seller expectation that's really hurt that much, but I think it's going to change over the next year.
Yeah, I think that's a good point. I think that for us over the last year, we were I wouldn't say inactive, but certainly sitting on the sideline. I think one of the kind of sort of mathematical truities that I believe in is mean reversion, right? And so we know that real estate is a market that tends to be cyclical. And so, for us in our preference list, we're also saying we tend to operate again in secondary and tertiary markets. And so, understanding what the historical average for cap rates, what they have been relative to where they were over the last, 12 months, kind of sort of makes you, take a step back and say, does it really make any sense for me to pay a 4 cap for this asset when historically this has been like the 6 cap market? And so for us, I'm glad we weren't really active over the last 12 months, because we would have been paying 4 caps for deals, whereas today those same deals are probably trading at at a 5 cap, somewhere between a 5 or a 6 cap, and we would have lost a ton of money. And there's just not enough revenue appreciation or revenue growth to loss up for that dilution in capital value. So again, just really understanding your markets, understanding where historical cap rates have been, and understanding that everything is cyclical, understanding that directionally interest rates are going up. There's a positive correlation between cap rates and interest rates, and that over time interest rates and cap rates rather will continue to increase. I think it made a lot of sense for us to be patient, be very disciplined in our investment thesis and our investment philosophy, and just really wait for the relationship between cap rates and interest rates to normalize, which they have started to do. I don't know if there's that much more kind of sort of normalization to actually happen, but certainly I think that most folks are thinking that interest rates will probably come down by 75 basis points over the next 6 to 12 months, which should have some albeit marginal, I think, impact on prices. But you know, we're just remaining patient and very disciplined in our approach for the right deals.
Perfect. So I see we're coming up on the end of the session. I know folks are very busy, so I want to be respectful of their time. Frankly, this ended so quick. We're gonna have to do some form of a repeat, because I know there were probably 6 other questions that I just wanted to dive into, and we barely scratched the surface. But I know this was helpful to the audience. We will be posting this interview on the platform, and we'll make an announcement about that, because I know people would benefit from this information. And I say, on behalf of the attendees, thank you so much to the panelists. This was really helpful, and keep doing what you're doing, because I'm inspired by each and every one of you.
Thank you. Thank you.
Thanks, Vern.
Great. Can't wait to connect with you all offline.
Thank
My
you.
pleasure. Thank you.
Have
All
a good
right.
evening.
Thank you.
Black History
Bye
Month.
bye. Thank you.
Bye.